One of my favorite things to do in the market is to follow a lot of popular investors like Buffett, Ackman, Burry, and many others. And I love analyzing their portfolios. I love analyzing their recent buys and try to figure out why they bought a specific stock. Maybe I'm interested in it and maybe I add it to my own portfolio. Or maybe I can somewhat learn something of why they believe this specific stock is undervalued at the moment. And a recent one for Buffett, he's been buying a lot of it. And I have to say, I love a lot of the Buffett stocks. I like Occidental. I like many stocks he bought. But this is by far, in my opinion, the worst one. Like, I don't like it. I'm not a big fan of the company in general. But he likes it, or Berkshire Hathaway likes it. And they've been buying a lot of it. And this stock is SIRI, which is Sirius XM. It's down over 50% year to date. 50%. But Buffett, he likes it and he have been buying the dip. Over 4.8 million very recently. Then before that, 28 million, 9 million, 31 million, 34 million, $20 million. They've been buying a lot of the stock, and all of those stuff are pretty much all in October. So they've been buying a lot of it very, very recently. And they like the stock and they like it for a reason. And it's over 32% ownership in terms of Berkshire Hathaway. Then 6.5% is owned by Malone. And those two people are finding a lot of value in it and they like it very much. So I did my best to research SiriusXM and give you the research in the video and give you all that stuff so you could determine if it's maybe a good buying opportunity for you or not. SiriusXM Media is much more than just SiriusXM by itself. They also own Pandora, which I believe is their ad-free version where you could just listen to music, but you could, instead of you paying a subscription, I believe they put up ads and you could have to listen to the ads. Then they have SoundCloud, Sonos, and many others. So they have multiple businesses. It's not just about SiriusXM. Over 150 million total listeners. It's a pretty big company in general. And in terms of the time spent listening to something on a lot of those apps or websites, SiriusXM was still ahead, over a 21% share. Then you have Spotify at 20%. Then you have YouTube at 15%. Then you have Amazon Music 5%. And Pandora, which they own, is 2%. Apple Music 8%. And this is the main reason why I don't like the company. And it's mainly because of competition. You just have so much competition for people that want to listen to music or listen to a podcast. There's so many of them. And most of the audience for SiriusXM is a lot of older people. And most of the younger people, the younger generation, I don't believe they can be listening to SiriusXM. Let's just be honest. They will most likely be listening to YouTube or maybe Spotify or maybe Apple Music or the podcast over there or Amazon Music or something in Samsung or whatever. I don't believe they're going to be listening to SiriusXM. So the trend is really against them and time is against them. The more time passes, the more people are going to be adopting something other than SiriusXM. And that's just what I believe in. And the company is fighting for its survival, but it's very cheap. And if the company isn't growing, it doesn't mean it's not a good opportunity. Okay. Now, if you look at the profitability of this company, it's surprisingly profitable. It's very profitable. Average revenue per user is just right after Netflix, around 15.24. It's very good. In terms of churn, it's only 2.3%. It's not as bad as a lot of the other ones. We don't have something on Spotify, but even Disney Plus, which a lot of people believe it's sticky, is 6.5% churn. And for SiriusXM, it's around 2.3%. Gross margins, they have the highest gross margins, around 60%. Netflix is at 45%, and Spotify is at 51%, Disney Plus 29%. So it's a very profitable company. And as I said, they're doing their best to try to gain market share with the younger audience. They're bringing up a lot of podcasts, popular ones, to SiriusXM for people to listen to them over there and try to revive the business. And maybe they're going to be successful at it. But for me personally, I don't think so. I think it's mostly Spotify, YouTube, Apple, and Amazon Music, and those kind of websites. This is what will be likely dominant in the future. But as I said, the company is very cheap. It's trading at a 12% free cash flow yield. Buffett was buying 14-15% free cash flow yield. It's still around 12.5% free cash flow yield, which is very, very cheap for this company. The highest it has ever traded. The mean was 7%. It's almost double that. And it's sitting around 12.5% free cash flow yield. This is very, very cheap, but this is due to a few reasons. The first reason is the balance sheet. The company has around $100 million in cash, which isn't too bad. But then they have around $9 billion of long-term debt. So they do have a lot of debt. And if you put in the free cash flow on an enterprise value instead of a market cap, the free cash flow yield will be way lower than 12%, maybe 8 or 9%. So the company has a lot of debt. But the debt is not a concern because it's spread out over multiple years between 2026 to 2031, around a billion and a half every year. And SiriusXM can easily manage it as they're making around $1 billion this year in free cash flow. And this is despite them having a lot of one-time expenses due to the spin-offs and a lot of stuff that happened. They have a lot of one-time expenses that won't be reoccurring next year. And that's why the free cash flow is expected to expand to $1.3 billion, almost a 30% increase by 2025. And then one and a half in 2026, 1.6 in 2027, and up to 1.7 in 2028. So the 1.5 billion a year, they can easily manage, they could refinance some of it, and they have a good credit rating in my opinion. And it's not a concern, but there's still $9 billion is a lot of debt. And you just have to know that. Now, in terms of valuing the stock, it's not easy at all because the company is pretty much not growing. It has no growth. You look at revenue growth, there's no revenue growth. It's expected to become more profitable over the long term in terms of free cash flow and margins and many different things. But in terms of revenue growth itself, as I said, it's fighting for its own life. It's fighting to survive. And there's no revenue growth, 1%, 0.5%. It could even end up declining over the next few years. So there's no growth. And from me looking at other comparables, at other companies that have a lot of debt, that are free cash flow machines, and they also have no growth, they tend to trade around the 10 times free cash flow, around the 10-time multiple. So if we take the 1.75 and assuming they were able to reach it by 2028, which is, in my opinion, optimistic, but assuming they could get to 17 billion, which is 17, and we put in a 10 multiple, which is around $17 billion market cap 5 years from now. The current market cap is $9.2 billion. So this is like a 90% on the upside, 92% upside over the next 5 years if it trades at 10 times free cash flow, which is putting in a multiple expansion, 10% free cash flow yield. And this is assuming the company does beat or meets the analyst expectation of 1.7 billion, around a 60-65% increase over the next 5 years. For a company that has no revenue growth. This is very optimistic. But even with all that stuff, I am seeing around a double over the next 5 years with SiriusXM, and I'm seeing a lower debt balance and good dividends. They do dividends, they do buybacks, and many different things. So it's a very cheap company. It's not bad at all. A lot of that stuff is priced in. But for me personally, it's not my favorite, and I wouldn't personally buy it. I think there's better opportunities in the market that could 2 to 3x over the next 5, 6, 7 years that don't have the revenue growth problem that SiriusXM has. Because I've seen it before. Whenever a company is flat to barely growing, it most likely ends up declining. And this is the worst thing that could happen, and the stock keeps going lower and gets revised down, and it's an ugly picture. And for me, it's not bad, but I wouldn't want to be involved in it. I was involved with no revenue growth companies before, GEO and others, and I had a lot of assets they were selling and paying down the debt, and many other companies. But SiriusXM, I'm just not seeing it. Buffett likes it, Malone likes it, so it's an undervalued stock. You could make the decision for yourself, but for me, it's not my favorite, and the time is against you. It's not your friend because of the massive competition from YouTube and others. So that was just my opinion on SiriusXM. Not financial advice, just my opinion. Thank you for watching the video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.